Hi, welcome to Ask the Attorney. My name is Susan Tierney, and this is Scott
Horne. Hey, Susan.
And we have an interesting topic today. It's about wealth building in the 2022 economy. So we were talking last night about kind of doing a funny skit around 𝐼𝐚𝐬𝐾. And then we came to the conclusion that probably everybody watching this has no idea who 𝐼𝐚𝐬𝐾 is. Do you want to tell them who 𝐼𝐚𝐬𝐾 is?
Well, for all the youngins, as we'll call it out in the marketplace, right? You'd have to go back and look at old Johnny Carson reruns and whatnot.
𝐼𝐚𝐬𝐾 the Great.
𝐼𝐚𝐬𝐾 the Great.
He had a turban on his head, and I forgot my turban to bring for you today.
But I got a makeshift turban.
You do? What is that?
We're gonna do that, and there's my turban, okay?
Okay, now what did he do? You'd read the answer?
I'd have an envelope that was hermetically sealed, by the way.
Yes.
And you would give me...
I'd give you the answer.
And I would
and
tell
you
you
would
what
come
the
up with the
question is.
question. Funny
Well,
series.
we'll have most of them throughout.
But
one
really,
way or the other.
this is kind of a crystal ball prediction, so to speak. You've been in this industry for 30 years, so you're pretty good at knowing what's going to happen. You've been through how many crashes now?
I've been through two major real estate crashes. And recessions. Been through numerous turns of the economy. And one of the things I always find that's really interesting is I was told as a young guy, just getting the real estate, you'll know and you can feel when the market turns. You know, for instance, here in at least the Texas marketplace several years ago, the market just started to turn and then it just exploded and it took off.
Right.
And things really do happen like that.
Yeah.
And the prices just skyrocket. And you're going, what is going on?
Right.
It's happened in the early mid-2000s. It happened in the mid-late 90s. And it happened again here in the last couple of years as well.
Yeah.
And sometimes it catches us by surprise.
Right.
And everybody thinks that they can just read it and know what's going to happen. And I guess if we were all that smart, we wouldn't be sitting here having this conversation, would we?
Right. So Scott, let's just talk about, what is the current state of the economy right now in Texas? Where are we sitting as investors?
In my personal opinion is, it spooks me. I don't know. There's too many things that just, they should frighten you to a certain extent.
Right.
I've heard certain data out there that some 8.8% of Texans are in default on the mortgages. Now that's default, that is not forbearance. I heard that some 30% of the Texans who are homeowners, in addition to 8.8, are in some form of forbearance. So think about that. That's almost 40% of homeowners are in some form of distress.
Right.
What does that mean?
Right.
At some point, the government giveaways have to end.
Yeah.
Unless
a lot of them have already ended, but the
unemployment.
That or
may as well move to China or Russia, or who knows where else about it, and become totally socialist.
Yeah.
I don't think that's what our goal or plan is out there. But it does. It spooks you. And when you're in an economy like we're in right now, where everything is just exploding around you, you're getting multiple offers on a property, you're getting offers over your asking price, things that you just don't, how can that happen?
Right.
But it is. What does the market do? Well, what we have seen a huge influx of, at least in the Texas marketplace, are people getting into the wholesale game. I mean, everybody, their mother, brother, sister, dog, cat, etc., is now a wholesaler.
Right.
Because it seems to be such of a hunger for realty assets of some format. You see a huge influx of the fix and flippers. And this philosophy that I can buy a house for 85, 90 cents on the dollar. By the time I get it renovated, I can sell it for 110% or maybe 115, because things seem to be moving that fast.
Right. Right.
It's kind of like going to Vegas and rolling the dice.
Yeah.
And it's just like, oh my gosh. But I've been through this market for 30 years. I've seen the good times. I've been out there with the bad times and rolled through it. And grant you, the good times are awesome and the bad times are really bad. And then you had that middle ground. And normally we exist in that, we'll call it the normality of real estate. And eventually we have to get back to normality.
Yes.
You can't have this constant, increase in value that just goes nonstop.
Right.
But I always ask myself the question, what happens to the investors who are in the wholesale game only, who may only be in the fix and flip game, when all of a sudden things change and the brakes are put on?
And it dries up.
Yeah, because prices can't keep going up forever.
Right.
I often say foreigners, and for all of you out there who are non-Texans, that means California, New York, New Jersey, coming to Texas.
Florida. A lot of people come from Florida.
They're going to Florida.
No,
Florida has a huge influx of people coming into it, just like Texas does right now. But that's going to slow. If it doesn't, Texas is going to explode.
Right.
Heck, Florida might too.
Yeah.
But when that happens, what I have learned through all this time is we as investors, and I've seen this from both the legal side as well as the investor side, you have to learn to adapt with the marketplace. You have to be willing to make changes.
Right.
If you don't, you're going to have a problem.
Yeah, it's true. The market's changing, rates are going up, and the demand is decreasing. It decreases daily, and foreclosures are on the rise. There was just a big article in the Dallas Morning News online last week about foreclosures. I sent it to you. Did you read it?
Not yet.
Okay.
I was going to ask you walked out front and got your newspaper, but
No, I didn't get my
that.
newspaper. I read it online. So you have to, know how to take advantage of the situations, and how is inflation going to affect us? We see it in everything.
Just think about it. We in the real estate business, though, we drive for a living.
I know.
We do driving for dollars. We drive to all of our houses.
Yeah. How the price of gas
is now doubled almost.
Is affecting us, and even world issues. What's going on in Ukraine and the stock market. I mean, we are in some crazy times right now. So what do you think that investors are going to do when the interest rates go up and the demand diminishes?
You know what I have seen, at least going back historically, Susan, when you go through these cycles, and real estate isn't a cycle. I've been told that real estate has a double cycle. It has a 7-year cycle and a 20-year cycle out there. But if the investor is single-minded and doing one thing only, and that's about it, when these things hit, they're stuck.
Right.
They're out of business. I equate that most recently to the crash of 2008 and 9. When Texas had about 200,000 plus realtors out in the marketplace. And when the crash hit, Susan, our offices got stuck with a whole lot of people who just walked away from the houses. Not a single owner occupant walked away. It was just the investors who walked away.
Yeah.
It wasn't their home. It was a investment. It was a commodity for them. And at that time, what really saved our rears was the knowledge of owner financing, because sellers couldn't sell, buyers couldn't buy. You couldn't get a loan anywhere. You were stuck.
Right.
There was only one solution. It was seller financing. But everybody had gone brain dead on it during the prior subprime era, as we call it, because back then, if you could fog a mirror, you could get a loan. No one cared about thinking or maintaining some creative mechanisms in business.
Right.
And this was really the solution for the time. It helped people who really wanted to buy houses, who could afford buy a home. But you had to have the ability to offer it to a homeowner. You also had to have the knowledge of how to offer it to them as well. It was that knowledge that was lacking. We pushed this out through the Texas marketplace at that time. Lots of things going on. There were lots of realtors hurting. Lots of sellers were getting foreclosed upon. Buyers wanted to buy, they just couldn't buy a house. And what I found intriguing is that the marketplace turned its complete back on it. In fact, you got this crossed arm look, this clenched jaw. We're not going to do that. That's illegal. You can't do it. It's this, it's that. Of course, none of that was true. It was all just a misnomer in the marketplace. Over 100,000 realtors walked away from positions because they weren't willing to adapt. The brokers weren't willing to adapt. And look what's happened to that industry since. It has exploded in the last 10 to 12 years, and it's going to keep going, I believe. But that unwillingness to change with the times, they could have helped tens of thousands of sellers not get foreclosed on. They could have helped tens of thousands of buyers get into a home had they just had the willingness to understand this and realize when it's done the right way, owner financing is okay. But they chose not to do it. And so just like the investor marketplace right now, if you're simply in the wholesale business and that's it, or if you're simply in the fix and flip business, and that's it, and you're not thinking outside the box going, what if this happens, and projecting forward, you'll be in that same position. Well, you will get knocked out of the industry completely unless you learn how to adapt.
Right. Okay. So Scott, as investors, what is our competition today? I mean, what are we really up against?
You know, the market's goofy out there. Never before, in the last 2, 3, 4 years, there's this influx of people coming into the marketplace, at least here in Texas. I'm not sure what's going on in other states per se. But things that I see are, for instance, if you go to the foreclosure auction, I'm seeing houses selling at 100 cents on the dollar, sometimes more.
Yeah.
I think there's a lot of foreign money coming in because they have such bad problems in their countries. Money's coming in. Now, is that from Asia, Europe? I don't really know. Is it from India? I'm sure it's all of those. Is it from maybe the Mexican cartels? I've seen and heard a lot about that out there too. Where they, I don't want to use the word laundering money, but they're parking it. Because they'd much rather get 2, 3, 4% returns on the money than zero or lose it in other places. We see these hedge funds coming in. You know, there have been statements made that to buy houses in Texas by these hedge funds, and of course they did.
Yeah.
And it creates this false sense that the market's really out there exploding.
Yeah.
It is in some format, but they are inflating the values in that regard. These hedge funds are buying houses at 90 cents on the dollar. They're spending 10, 20% additional dollar amounts
Just to
in
fix
renovations.
them. Yeah.
And we investors who are normal in this marketplace can't do that. There's a company called Blackstone. It's the world's largest hedge fund. They're coming in with a we'll buy the house for you scenario at full price, doing a lease option. And that is greatly limiting demand. With the influx of people coming into the Texas marketplace, that's limiting demand. And of course, prices are changing as well, going up nonstop. We just are getting squeezed out.
Yeah. Well, how should we compete with all this? It seems like just the little guy is getting squeezed out, kind of like Walmart and Amazon came in and put all these people out of work. As investors, what are our strategies today? It seems as, nothing will ever go wrong, but we all know that's going to change on a dime. So what kind of strategies are you thinking?
Right now, we're seeing people out in the marketplace they're paying too much for houses typically because they're playing that game that it's going to go up.
Right.
And I know that I have an example where I sold a home just 60 days ago with seller financing. It was sold at about 107 or 108% of full market value.
Right.
In 60 days, they have it priced almost 20% higher. Now, it hasn't sold, but we found it in multiple listings. You're going, you have got to be kidding me.
Right.
Can they really do that or not? And I don't know. But we as investors, we have to learn how to make money, right? And I always thought it's kind of fun talking about this stuff a little bit. How do we build wealth? How do we make money? And the easy question is you're born with it, right?
Right.
Did that happen to you?
No.
Didn't happen to me either.
No.
Wrong side of the tracks, right?
Wrong side of the tracks. And we didn't win the lottery either, right?
Well, you can win it, but you got to pay the lottery.
You got to buy a ticket first.
Yeah, I don't do that. You can marry it, I got to tell you, I tried several times.
Didn't
Yep,
work?
That didn't work out. You know, but we can go out there and we can steal it. That might be fun, but we're not going to do
We
that.
don't want, we
And-
wouldn't look good in orange.
But, you know, really, in the day, we wind up, we have to go out and earn it, right?
Yeah. That we do, and unfortunately, we have to go to work every day and make a living.
Well, so does everybody else.
Well, wealth generation comes through buy and hold techniques, right? So let's talk about that a little bit.
Okay. You know, so one of the things I learned a long time ago is that in business, you have one commodity you cannot get any more of.
Right.
Your time. That's it. You can have more money, more everything else, but you have a limited amount of time. That's all we got.
Right.
And so you can make money with the time that you have, I get it, but in order to go beyond that, you have to learn to utilize other people's time to help
Exactly.
you generate. Now, does that mean you partner with other people? I know we do a lot of
We
that.
do a lot of
out
that.
there because we're limited on time, and
Yep.
our philosophy is I would rather own half of something than 100% of nothing.
Right.
It's pretty simple. But we also have to understand that we want to hold an asset and let somebody else's money pay our debt down.
Right.
And I only know of two ways of doing that. And one is when we buy a house, we can buy a home and lease it. And we can lease it with traditional long-term leasing, corporate leasing, or short-term leasing, such as Airbnb, for instance.
Right.
Got it. Or you do owner financing. And of course, when you look at that, neither one is right or wrong over the other one.
Right.
It's really up to what the investor wants. And the bottom line becomes, what does the investor
Yeah.
want and what are the comparisons between the
Yeah.
two?
Other things we would want to do as well is look into secondary or tertiary marketplaces, because this market is so saturated.
Oh, it is. But you know, as an investor, when we want to do this and be able to buy our houses at the right price, so we could actually have a reasonable buy and hold type arrangement, you can no longer buy in the central hub of your primary cities. The prices are through the
Right.
roof. The areas that used to be the worst parts of town
Yeah.
have totally revitalized. And so and it expands on out. So you have to go out to the outskirts of your particular city. And then what you really have to do is get out of it completely. And as you said, go to your secondary and or your tertiary marketplaces. And do you really want to do that?
Right.
And sometimes the answer is yes. You know, I'll tell you, I mean, I used to buy houses all the time in Central Texas. I just don't want to drive there and stay every 2 weeks in those areas for several days and come
Right.
back.
Yeah.
You can do well in those areas if you do that,
Yep.
if you had that propensity.
Right.
Again, 30 years ago, I'd be doing it all over the place.
Right.
Today, not so much
Yeah.
for me, but it's one of the possibilities and things you got to think
Yep.
about that are out there.
Yep. So basically, in a nutshell, we really need to learn more creative strategies.
Well, I think
Right.
that's true.
To really acquire properties, like determining how better we can help people in a foreclosure or a pre-foreclosure, because that's going to start hitting, right?
As we said in the very beginning,
Yep.
it's coming.
It's coming.
Something's coming.
Yeah.
I don't know
And it's
what.
slowly creeping up, and it's going to be a boom. The other thing that that you're very good at as an attorney, and you teach this in a lot of your classes, is lien issues and how to maybe buy a judgment lien and foreclose if it's not a homestead.
Well, I think we as investors, you know, you look at eventually the wholesale game will diminish. Eventually the fix and flips,
Fix
easy for me to say,
and flip.
fix and flip game will diminish. And so that's where you have to branch out into some of the longer term hold
Right.
scenarios and figure out how can I invest versus making real estate a job.
Right.
And by the way, maybe these people who are in the wholesale fix and flip business, they go become a realtor, which can be a job, that they can at the same time learn to invest simultaneously with that and blend the two together. And I get those kind of things are all possibilities that are along the way.
Okay. Okay. So Scott, once we find a way to acquire the assets, what do we do with it?
Excuse me. Well, you know, Susan, you got to buy the property. I also think one of the things we got to do as we buy that property is, besides learning better ways to acquire it cheaper if possible, we talked about maybe moving outside your major metropolitan areas earlier. 2, you need to always be searching for cheaper money sources.
Right.
And then once you have those and you've got that asset that you bought, as we said, for me, it's either rent it or owner finance it. And the question is, which one do you want to be? We believe here at the Owner Finance Network that the best way to generate wealth is through owner financing.
Right.
And we can compare and contrast both leasing and owner financing quite a bit.
Yeah.
But to just really get it down into a nutshell, because when we sell a home with owner financing, we're getting 110% of our sales price typically. We're getting 110% of the rental amount versus the standardized lease over here. But also because we're getting a down payment in, I'm able to buy at least 1.5 more homes with the same amount of cash that I could buy a rental property with. Because in order to do either one of those two strategies, we have to have long-term financing.
Right.
So you got to get that in place. And I will just tell you that when you look at both systems over the course of a time span, I think at the end of that time span, monetarily, we're going to be the same.
Yeah.
And the question's going to be, which one got you there quicker and easier?
And easier, because we don't want to be landlords,
Well,
right?
I don't like being a landlord per se.
We
Some
don't
may.
like, I don't think we maybe only have 2 or 3 rentals at the most.
We do.
And
But I just think the owner financing is a easier mechanism.
yes,
It also creates more exit strategies. And one of the things I learned long, long ago after one of the real estate crashes is having exit strategies is so important in business. You know, I'll say, when you look at everything that's pyramidal in business out there, imagine for a minute if you had a $50 million building you were invested in, and you had to get out of that transaction. How many people could buy that $50 million building? There's not very many people who can do that, or
Right.
entities. But if you're in a $100,000 house, you have got a huge number of
Right.
exit strategies
Yes.
available.
Yep.
Either from a retail perspective, from an investor perspective, and if you're in the owner finance business where you've created a mortgage on that property, you can sell that mortgage.
yeah. Well, Scott, we could go on and on and on and on and on and talk about owner financing, but as you and I know, but maybe our audience doesn't, on our website, theownerfinancenetwork.com, we have dozens and dozens of free videos, soup to nuts, everything you need to know about owner financing. So if you go to our website, on the navigation bar, click free videos, and Scott will go in depth on owner financing, because we kind of got to keep it short. Another option we have is you are coming back to the in-person events.
The live stage.
The live stage. It's been a long time, hasn't
You know, 2+ years, I think, you know, that we used to do the Texas circuit, as we'd call it, where we would do 12 to 15 live seminars a year throughout the Texas marketplace. And of course,
Yeah.
we've done none in the last 2 years.
Yeah.
And I so much more enjoy teaching this class in person than, say, by Zoom and something like that. You can get so much more across. You get a chance to answer questions that really benefits the audience so much more, and just give them so much more information. And we're doing that this coming on Saturday,
It's
April the
Saturday,
2nd.
April 2nd. It's going to be in Dallas at the Quest Trust offices. It'll be from 8:30 to 5. We're going to have breakfast and lunch served. And if you go to the website and you look under the webinars and events, there's a sign-up page. And we hope you guys all check that out, because we have a limited number of seats in their building, and it's going to be a great time. I know you're
We're gonna
excited
talk
to get
all
back
things owner
out there.
financing, give them all the information they need to know to get started in this industry the right way, I hope.
Right.
Fill in the gaps with the Owner Finance Network videos and
Yep.
seminars that we do as well. So guys, we look forward to getting a chance to see you guys there.
And then also, if you're out of state, or you can't make it that day, we are going to record it on Zoom. So look at that option as well. So Scott, in closing, what we need to do is emulate what those who are successful are doing, right? And why recreate the wheel? So what do we need to do?
Well, I think we need to be the bank, right?
We need to be the bank. That's it.
It's the new phrase that comes around out
Yep.
there. And you know, what do banks do? They borrow money from individuals at very, very low rates.
Yep.
And they finance it back out
Yeah.
to us at higher rates.
Yep.
Who controls all the money in the world? The banks
Bankers.
do.
Yep.
So when we can learn to play the finance game as part of the real estate game, I really think that's how you start to learn how to generate wealth. Now,
Right.
it's not an overnight success. You don't go from here to here.
Right.
It is one of these games, but that's what works, and it's what's always worked.
Right.
And that's what we want the investors to understand, is how to accumulate wealth and become independently wealthy and create that generational wealth that we're all looking for.
Absolutely. Join us next time at Ask the Attorney. Thank you, Scott.
Thanks, Susan.